Hi, I'm Robbie Young. I'm an intern at FinTech TV, and you're watching Taking Stock.
Two minutes to go here into the closing bell from the one, the only trading floor of the New York Stock Exchange. Speaking of one and only, look who joins me now to kick off the broadcast, the Einstein of Wall Street. All-time highs for the New York Stock Exchange Composite Index and the small caps, which continue to outperform the other major market indexes here in 2026. What did you see on the tape today as we head into the closing
So it's
auction?
curious. The last couple of days, it's really been an oil trade, right? Oil's been up, market's been a little bit down. Although the advance versus declines have been fairly 50-50, so it feels very rotational. And at the end of the day, when people are confused with the market, we know that they just go to the lifeblood, which is earnings, and earnings have been great. 86% of the S&P have beat, amazingly enough. And that's curious too, because think about it, those are all coming out of that time last quarter where we were in the midst of a war, and how crazy it was for oil to go from 67.39 to 120 and hang out there, and all the inflationary impact of all that was quite significant. So the last couple of days have been a little bit questionable. I mean, it's not bad. It's sort of foundational in many ways. And today it feels like the buyers are back. We had those couple days where we opened up, sort of trying to get some momentum on the buy side, and the market sort of faded 2 weeks in a row. Today was just sort of solid. We opened up and stayed up. So the buyers are once again in control. They're picking this, and they're comfortable with it.
Yeah, the inflation print today right in line with expectations. We'll get the latest numbers on PPI tomorrow. Couldn't move markets. Peter, thank you for being here as always.
Absolute pleasure.
Time now for the
Nixon
closing bell.
5.
Software Summit from the team here at Jefferies, doing the honors here on the trading floor of the New York Stock Exchange. Your final tail of the tape for this Wednesday. It's already Wednesday, August 12th. The S&P 500 up 0.25%. The Dow, oh man, just down ever so slightly, down 0.04%. The New York Stock Exchange Composite Index at an all-time high in the green, 0.3%, and the small caps, the best of the bunch. The Russell 2000 up 0.6. To the S&P we go. Tech, real estate's the outperformers. Your sector laggards, telecom, materials, and consumer discretionary. Over in the Dow, big day for Nvidia, Cisco, and Honeywell. Your Dow laggards on this Wednesday afternoon. Salesforce, Home Depot, and Microsoft. Speaking of Nvidia, Mag 7 mostly trading lowered. Nvidia certainly the outlier, up 2.7% headed into the closing auction. Meta shares sliding in the afternoon, currently down 3.3. SpaceX, not a Mag 7 stock, but kind of a Mag 7 stock, having a nice bounce back, up 9% on the day. Let's bring in our very good pal, the one and only Caleb Silver, EIC at Investopedia. My man, nice to see you. Thank you for being here. Okay, so you and I were talking today. We've got some amazing ticker symbols. Let them eat cake, EAT and CAKE, Brinker and Cheesecake Factory, respectively. All-time highs. What's going on here for these restaurant stocks?
I've been digging around the restaurant sector. Just today we had some earnings out from Cava yesterday. We had Brinker International with a conference call this morning. These stocks are killing it right now. I don't know if you saw Cava shares up 15% today. Same store sale increases quarter after quarter. When everyone's concerned about inflation, you see this middle dining segment. Fast casual, a little bit higher than fast casual, doing fantastically well. Brinker, you don't know, but you do know Chili's. That stock up 5% today. 5 straight years of consecutive same-store sales growth. Are recovery in a lot of these stocks when people are worried about inflation, they're worried about tariffs, they're worried about spending. This middle market is doing fantastically well in the restaurant sector. Eat cake, let them eat cake, all-time highs.
Now people are looking at this saying, wait a minute, I feel so stretched as a consumer, and I know I'm not alone. We see the soft data. We see how sour far too many American families feel in terms of how little they feel their dollar actually goes. Is that a little bit of a mismatch with the reality we're seeing from some of these names?
100%. We feel terrible. We've actually never felt worse if you're looking at consumer confidence from the University of Michigan, yet we continue to spend. We'll get the retail sales figures on Friday for the month of July. We were still spending, even though we're complaining, and airline tickets are up 25% from a year ago, and they're up something like 45% from 4 years ago. We still continue to spend. The front of the plane, jam-packed right now. Tough to get restaurants restaurant reservations. We're continuing to do it. We're driving ourselves further into debt, complaining the whole way through, but spending has held up because balance sheets are pretty okay among the American consumer.
I remember a lot of guidance over several quarters from the major airlines, but also the restaurant players about the proliferation of GLP-1s. How has that shaken out so far versus the earliest expectations from analysts here on Wall Street as it pertains to a lot of these stocks?
Yeah, look at Cheesecake Factory, all-time high. That'll tell you that it's not as big as we thought it was. Now it's impacting other industries significantly. Talk to anybody in the adult beverage sector. Sales have been falling for the past 3 to 4 years. That is a trend in motion that will not stop. Other sectors are actually doing rather well. There's a lot of tourism now around GLP-1s and longevity and wellness travel. That's on fire right now. Experience travel's on fire right now. We can't get enough of Europe as Americans. We're over flooding that continent. They want us out. So we're still traveling, we're still spending. That GLP-1 thing is a mega trend in effect, impacting some industries, but not all equally.
I know you are still just as buzzy as I am here in summer 2026 in the greatest city in the world, Nixon 5. How about MSGS up another 5% today, appropriately so. Another all-time high for Madison Square Garden Sports. How are you matching that news story with what we heard out of the Los Angeles Lakers here today? Big one.
Surprise purchase of the Los Angeles Lakers, $12.5 billion. That is one of the most valuable franchises in sports. But guess what's a little bit more valuable? Your New York Knickerbockers, ticker symbol MSGS. Dolan has been trying to split out the Knicks from MSGS. That's at an all-time high, but guess what else is? Sphere. So Mr. Dolan having a very nice middle of the summer right now after bringing in the Natty for the New York Knickerbockers in this great city. So that stock's at an all-time high. Sphere's at an all-time high. We're seeing a lot of all-time highs across sectors. A couple of other stocks making all-time highs. These stocks are 100 plus years old. JP Morgan, all-time high. Bank of America wasn't always Bank of America, all-time high. You're seeing a lot of highs with old companies, and GE Aerospace finally took it 30 years to come back to all-time highs.
Wow.
It's back as GE Aerospace, minus the refrigerators, minus the light bulbs.
See, we love cracking the history books with Caleb. This is what we do, and we authentically talk about the stuff as much off camera as we do on.
We're geeks.
Yeah, we definitely are. Before I let you go, CPI print basically in line with expectations. What are you looking for wholesale tomorrow that could be on the radar for investors?
Same thing. You're going to see a little bit higher energy prices. You're going to see how that bled in to some of the producer prices. But we know where we are with inflation. We're between 3.5% and 4%, and consumers feel like it's a lot higher. Producers are passing some of those costs on. It is not affecting investor sentiment right now. Why not? Earnings are strong, my friend. Ed Yardini talks about FOMO or FEMO, fear of earnings momentum, missing out on that. If you haven't been playing earnings momentum, you haven't been participating in the rally right now. Earnings up 50% consecutive quarters, 50% quarter on quarter. Guess what? Expectations for 27 and 28, sky high as well. And what are we here for? Earnings growth, cash flow, free cash flow. We're getting it. Are you not entertained? Almost at all-time highs yet again.
Call him the Jalen Brunson of financial broadcast media, the one and only Caleb Silver, good friend of mine, good friend of ours here on the show. My man, come back anytime. Good to see you.
Thank you.
Skylar, grab your mic. We'll talk with you soon. Here are a few of the top calls that moved the tape this morning here from Wall Street analysts. First up, look at this, Howie. It's wide open for us. B of A reiterating CoreWeave as a buy after earnings. Analysts there see a robust outlook. Shares of CoreWeave up 20% after that report. Next up, Jefferies downgrading the gap to a hold from a buy on concerns about weakness specifically at Old Navy locations. Shares down today, down on the year 20%. Finally, Raymond James analysts downgrading On Holdings to outperform their previous rating was a strong buy. New price target $38 a share, down from 52. Shares fell 20% after earnings this week, now down more than 30% since the start of 2026. Howard, let's take a look at one of the top dogs in the S&P 500 today. Dell itself, of course, has transformed into much more of an AI infrastructure powerhouse. Shares up almost 260% since the start of this year. A market cap of about $300 billion. It is now the 55th largest company in the entire world, up almost 10% on today's tape. Dell will report quarterly results in just a few weeks on September 3rd. Recently on the J.D. Durkin Show here at the New York Stock Exchange, I spoke with American entrepreneur, investor, and financial educator Robert Krook. We talked all about his insights into personal finance and much more. Take a look. Favorite kind of like bumper sticker slogan about investing, like mine is, it's not timing the markets, it's time in the markets, right? The little quick little isms, the one-liners our industry likes to use. Do you have a favorite?
Yeah, I do. And time in the market is a great one. But for me, it is make your money work as hard for you as you work to get it. Because so many people, I see it every day, they're making good money, but they're not invested, or they're sitting on the sidelines trying to time the market because some guru told them that it's, we're going into a bear market in AI right now and the fun is over. So for me, it's all about making your money work as hard for you. I have very strict guidelines on every dollar that comes into my bank accounts from all my revenue streams, and all of my money has a job. I want every dollar to have a job. And I see too many people where they have a year's worth of bills, in their emergency fund, or they've got hundreds of thousands of dollars sitting in these, maybe it's a high yield savings account where it's not really invested. It's making something, but it's not invested. So that's my favorite.
What are some of the ways that social media and the creator economy have changed the way that people learn about money in your experience, Robert, given you are such a prolific creator and you do an amazing job, much like Austin, reaching people where they are?
Yeah, I would say the number one thing that I tell people every single day is pick less than 5 people on the internet that you follow, that you believe in their message, you believe in their backstory, and that you trust the information, because you and I see this every day. There are thousands of people out there in the business and finance sector of social media, and they're reading from a script, or they're pay to play on every single thing they do. And none of the value is forward facing. It's all behind a paywall because they're selling courses, which is fine if you want to be a coach or sell courses. So for Austin and I and the Rich Habits podcast and the Rich Habits Network, I think the most important thing is lead with value first, so people can feel connected to us and have that and build that trust, because that's the number one thing. I would have never guessed 10 years ago that making tens of millions of dollars in my career and losing millions of dollars in my career throughout all of the different types of investing I do would have led me to become such a prolific educator. But I've actually lived it. I build it. I'm doing it every single day. I mean, right now we just launched a Reg A real estate investing platform called VestFunder. And it's just incredible because it lets the everyday investor invest alongside me because they trust me and they want to get a touch of real estate but don't know how to do it. So I think that's the key. Finding people that are actually building in public, that are sharing with people their knowledge from their careers, not just someone that's chasing the shiny ball to try and make money off of people online.
Robert, I got just a couple minutes left. A quick lightning round, if we can. Quick questions
Sure.
and quick answers, if possible. First, best investment you ever made?
Bitcoin in 2010.
What is one habit that changed your financial life?
Always realizing that the more consistent you are and you don't think about the timing of the market, the better off you'll be long-term.
What is one book that every young entrepreneur should read?
Think and Grow Rich.
Okay, Think and Grow Rich. Nice. One piece of life advice that you wish you had heard when you were 25 years old?
Never stop learning. So many people in society today, they're addicted to the adrenaline rush of social media, but they stop learning. And if they are learning, they need to educate and they need to execute.
Welcome back to this Wednesday afternoon broadcast of Taking Stock, live from the trading floor of the New York Stock Exchange. Our next guest is no stranger to you all, longtime friend of ours here on the broadcast, Andrew McCormick, head of institutional and market development at Chainlink. Nice to see you again.
You too, sir. Congrats on the Knicks championship. First time I've seen you since
It's
then.
the first 6 and 5. We'll say it every day down here for the next year as long as we can. Let's talk tokenizing an asset. This is something that insiders are much more aware of. The average person watching at home, they see these headlines, they say, what does that actually mean? Explain it simply so people better understand the process.
Sure thing. So shows like this, media, emails, IMs, they're not just 9 to 5 during a weekday, 24/7, right? So our money should be the same thing. So let's take assets, whether it's cash, other foreign currencies, money market funds, equities, put it on a blockchain, allow it to trade 24/7, peer-to-peer, whatever it may look like, and just trying to make our money more accessible and more efficient.
Why do you think Wall Street is so interested with the general iteration of tokenization right now? Because 10 years ago down here on the floor, we weren't really talking about this. Now I don't go very far in my day-to-day without talking about it.
Absolutely. Even I think 2 years ago, 3 years ago, there was a lot of skepticism, but I think Wall Street, banks, financial firms to recognize this can make our existing systems faster, more efficient, lower risk, help us make more money, help our customers, and that got people's attentions, and it's gone from ideas and brainstorming to real life production platforms now.
So that's why I was wondering, where are we in the process? Let's say this is a 9-inning baseball game. How deep past the first pitch are we to fully realize tokenization across the board?
I'd go top of second inning.
Okay.
So I think today there's maybe 200 or 300 billion or so of assets that have been tokenized, and an exchange like this each day is doing hundreds of billions, maybe even $1 trillion. So we're early days. The market out there is massive and endless. We've had some banks say they expect by 2030 $4 trillion of tokenized assets. So if we're sitting at less than $500 billion today, I go top of second.
Andrew, do we have a sense yet what this will eventually mean for everyday investors and even for people that are not really dialed in on the markets or day traders? How about people with just 401k? Hey, they've played the game over the years of their career in terms of retirement. Is it a clear picture yet on how tokenization will impact those Americans?
I love this part of the story because I think it will give us all more freedom over our money, not just but the people all around the world who for their whole lives, investing or otherwise, are kind of tied to US market hours. So if you're in France or Australia and you want to trade whatever stock, you got to be waking up at crazy times to do so. But in the world of tokenization, you can do it when you want, with whom you want, and it's all about freedom. I think that's a win for everybody.
What is one component of the general tokenization or even blockchain storyline that you still think we are not talking enough about? What should we be more focused on as the underlying tech continues to evolve?
So at the heart of Chainlink especially is security. There's people every hour of every day trying to hack into financial systems, whether it's on a bank account, corporate systems. Chainlink, our system, it's all about security first, to making sure people's assets are protected, because we work hard for our money. You don't want to lose it, and so that security topic is critical for today and also innings 3 through 9.
Okay, so I can't talk about blockchain without asking you about the Clarity Act. I am very focused on how many days until the midterm elections, 83 from today until Tuesday, November 3rd. If you're an active member of Congress, you probably don't want to be passing legislation. You want to be fundraising, you want to be campaigning, you want to keep the job that you have,
right.
And yet we're still waiting for progress on the Clarity Act. Where are we? How do you see this shaking out realistically?
So I've been in this space for 9 years. Since 2017, I've been saying we'll soon get legislation answering this topic. So now we've got another month or so to a vote on September 15th, and hopefully then move it to a real vote. So it's tough. The wait is hard. It's a little sad at times. I'm usually super optimistic. I'm going to keep that optimism, but we've got a vote on the calendar September 15th, and after 9 years of waiting, I will happily wait another month or so.
I got about 30 seconds left. Let's keep the optimism train rolling along here. What most excites you, not just where this conversation is today, where you most hope it can tomorrow, Andrew?
Yeah, as the industry continues to scale, because again, I genuinely believe this gives people greater access, freedom, control of their own money. Whether you're a brand new retail investor or you're running a hedge fund somewhere on Wall Street, you want more control and freedom. And tokenization can do that. We're early innings, and every month there's more and more projects. Every week, Chainlink's announcing a new partnership to help grow this space and ultimately give people more freedom over their own money.
Andrew, always grateful for your time. You're one of our OGs here on Taking
baby.
Stock.
OG.
We're coming up on 1 year of the broadcast. You've joined us basically since the beginning. I'm always grateful for your time.
Always a joy.
Come back anytime. Good to see you. Folks, don't go away. A lot more Taking Stock coming up from the big board right after this. Boom, let's do it, folks. Welcome back to the broadcast. Our third and final guest of this half-hour show joins us now. Say hello to Austin Federa, the CEO at DoubleZero, who joins us today with particularly exciting news and a new partnership. Grateful for your time, man. Thanks for joining us.
Thanks for having me.
A new partnership with Kalshi. What exactly will DoubleZero be doing with Kalshi, and how did this whole thing come together?
Yeah, so Kalshi is one of the premier prediction markets out there, and prediction markets are rapidly becoming core financial infrastructure, right? These things maybe started as a bunch of weirdos online predicting outcomes. They are now integrated and part of the existing financial infrastructure. And so what we're doing with Kalshi is DoubleZero Edge is all about high-speed, low-latency, complete market data. So all of this category of new finance platform, whether it's a crypto exchange or whether it's a prediction market, they're not running on the same type of Wall Street grade infrastructure and data feeds that you would expect for something that's this important for a financial infrastructure. So what we announced today with Kalshi is a low latency market data feed for the entire sportsbook and the entire crypto perps market on Kalshi.
Talk to us a bit more about the underlying business that you already have going on at DoubleZero. What could you not do before that you now hope you could better do as a result of that low latency partnership?
Yeah, so we're bringing the best of the traditional financial infrastructure together with the best of the new finance infrastructure. And so we are using the same types of technologies that Wall Street has used to distribute market data for decades at this point, multicast, dedicated fiber, low latency infrastructure, but we're making it much more accessible and connecting it into this whole new class of prediction markets and new finance.
Was there a natural iteration to this happening? Because, you know, we were not talking an awful lot about prediction markets, Kalshi, Polymarket, or anyone else several years ago. And now, much like the last interview on tokenization, I don't go 5 minutes without referencing a prediction market. I had to imagine you saw where the puck was going over quite some time.
Absolutely, and we saw demand from traders, right? Like our fundamental North Star is what do the big trading firms and what do retail traders want to trade? And there's this huge gap right now in information and data access between the big boys on Wall Street and, you know, the 3 or 4 guys in a Discord that are figuring out what the CPI is going to be and predicting it on Kalshi.
Yeah, of course. And we always reference those poly markets. I find them to be, or those event contracts, rather. I find them to be really important, but also very cool bits of anecdotal data. Help me as a journalist fill in the story. A single post on Truth Social from the president can move markets in seemingly seconds. How important is that real-time breaking news, tradable data to the market today, more so than ever before?
Yeah, certainly. I mean, markets move on all sorts of information, and access to information and free flow of information is the basis of open markets and honestly the basis of most modern capitalism. And so the more we can do to increase market confidence in that information, the more important it is for this infrastructure that's becoming core not just to new finance, but traditional finance. You look at the flash crash in crypto on 10/10 of last year, that was a market information data failure as much as anything else. Wow. You had market makers feeling like they could not have the confidence to enter these markets and properly make them, and so you saw percentage point deviations on centralized exchanges, things you would never see in the traditional financial market because that data flow is so good. And so we see a real gap there in the traditional markets and in the new markets to be able to bring that data together, provide it to many more people that can get access to a traditional multicast feed from NYSE or NASDAQ. And, you know, prediction markets are becoming rapidly part of that core financial infrastructure, not just for the biggest firms, but small and medium businesses and individuals as well.
How do you ensure that not just relationships like this that you just announced with Kalshi, but in general, this whole conversation, there's a lot of new tech that is influencing the market. Everyone's trying to figure out the kind of rules of the road. How do you make sure you don't give an unfair advantage to the professionals here on Wall Street as opposed to the day-to-day retail traders?
One of our core principles of DoubleZero is that the data is open and available to anyone. Anyone can come in and subscribe to these products and get access to it. One of the main markets we are seeing is AI agents actually coming in and getting this data and running automated trading strategies. And that's a really entirely new market. Suddenly anyone with access to an AI agent and a virtual server somewhere can run their own trading strategy in ways that was just not possible even 2 years ago.
Austin Federa, CEO DoubleZero, here with big news today. Congrats. Thanks for joining us.
Thank you.
Don't go away. A lot more Taking Stock coming up right after this. Welcome back to the show. Time now for the latest segment on how fintechs actually make their money with our good pal Scarlett Sieber from Money 2020. Take a look.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we look at what happens when the rails change. Today we're going to be talking about Volt, a payments company quietly moving money around card networks altogether. Volt enables pay-by-bank payments, letting consumers move money directly from their bank accounts to merchants. So how does Volt actually make money? First, merchant transaction fees. Volt earns per payment by moving money bank to bank, bypassing interchange and card networks altogether. Second, cost replacement economics. Volt doesn't need to win every transaction, only the ones where that card fee that hurts the most. Third, checkout permanence. Once pay-by-bank is built into checkout flows, it becomes infrastructure, not an experiment. So why does this matter now? Interchange compression and merchant pushback have finally made alternatives economically viable at scale. Volt monetizes pressure merchants are already feeling. And that is how Volt makes money, by giving businesses a way around the most expensive part of payments, and that money adds up. Have a company you want us to feature? Drop it in the comments and it might just make the cut. In the meantime, back over to you.
Tomorrow on Wall Street, the latest PPI wholesale inflation print crossing the wire first thing in the morning, 8:30 a.m., 1 hour for traders and investors who like to digest that crucial inflation print before market open. We'll also get the latest figures on weekly jobless claims. In the morning, the latest quarterly results from Bullish here at the New York Stock Exchange, as well as JD.com. What a great nickname for a company. In the afternoon, the latest quarterly results from Applied Materials. Final tail of the tape on this Wednesday, August 12th. The S&P up, the Dow down fractionally, the Stock Exchange Composite Index at an all-time high, and the small caps up 0.6%. Thanks for watching today's edition of the show. Have a great Wednesday night. We'll see you again tomorrow.